MP Materials cash pile dropped $378 million in just 6 months as CapEx accelerated hard into the Independence magnet facility ramp. In this video, I'll grade the report, then walk you through how I'd trade it. Nothing here is financial advice. MP Materials gets graded and traded. So on the headline, revenue came in about 12% ahead of estimates and up 89% year over year to $108.5 million. That's real, and it's driven by the pivot from selling raw concentrate to selling separated NdPr, which more than doubled in volume. On the EPS line, they printed a loss of 11 cents a share, which came in about 150% worse than expected. Just remember, this is a company still spending heavily to build out its magnet facility, so a loss isn't a shock. The miss on the estimate is what stings. Putting those two together, a solid revenue beat paired with a meaningful EPS miss. That's a mixed print, not a clean win. So the beat itself earns a C. And on consistency, MP Materials has been uneven on the bottom line. Revenue trending the right way, but earnings surprises have bounced around. That earns a B. Let's talk about the positives from the report. The top line jumped 89% year over year to $108.5 million. And the driver is the strategic pivot. NdPr oxide and metal revenue surged 277% as they moved away from selling raw concentrate toward higher value separated products. The volume story backs it up. NdPr sales more than doubled to just over 1,000 metric tons, up 127% year over year. That tells me the ramp from mining to separated product sales is actually executing, not just a story on a slide. Adjusted EBITDA swung from a $12.5 million loss last year to a $28.5 million profit. Now I want to be honest. About $17.5 million of that came from a government-backed price floor called the Price Protection Agreement, so the underlying operational number is closer to $11 million. Still a real improvement, just not as huge as the headline suggests. On the strategic front, they signed a long-term offtake for gadolinium. That's a heavy, rare earth, with a new aerospace and defense customer. And they launched Project Swarm to aggregate drone industry demand, with multiple U.S. and allied customers signing subscription agreements. So they're expanding the addressable market beyond the NdPr core. And the balance sheet is fortress-like. $1.45 billion in cash and short-term investments against about $1 billion in long-term debt. That's the runway they need to build the 10X facility and ramp the Independence magnet plant without near-term financing pressure. So on profitability, I'm landing at a B-. The operational swing is real, but I have to weight the fact that a big chunk of that EBITDA came from the government price floor, not pure commercial operations. Now let's talk about the negatives from the report. The company is still unprofitable on a GAAP basis, with a net loss of $20.3 million, or 11 cents a share. This business is scaling, but it's not yet earning its cost of capital. And for anyone modeling out a long-dated thesis, that matters. The magnetic segment actually went backwards. Revenue down 17% year over year to $16.5 million, and segment EBITDA slipped 7%. That reflects the transition period as older magnet precursor sales taper off ahead of the Independence facility going commercial. Cash and short-term investments fell $378 million in just 6 months, from $1.83 billion down to $1.45 billion. That's driven by $308 million in CapEx year to date. The intensity is accelerating hard. Startup costs surged to $14.5 million this quarter versus less than $1 million a year ago, as the Independence magnet production ramps pre-commercial, and SG&A rose 28% on higher headcount. The operating loss is still sizable at $32 million. And here's the one that really bothers me. The press release contains no forward revenue, no EBITDA, and no production guidance for the back half of the year. That leaves traders without any management set bar to anchor expectations in a name that's already sensitive to rare earth pricing headlines. So on guidance, I'm at a C-. It's not that management cut anything. They just didn't give us a forward number to work with, and in a story name like this, that reduced visibility hurts. And on red flags, I'm landing at a C. The cash burn against the commercial magnet revenue timing gap is the concern I can't dismiss. Independence has to convert qualifications into real revenue before that balance sheet cushion erodes materially. Putting it all together, MP Materials delivered a strong operational quarter that shows the pivot to separated products is working. Revenue up 89%, NdPr volumes more than doubled, and a real EBITDA swing even after adjusting for the government price floor. But it's paired with ongoing gap losses, accelerating CapEx, and zero forward guidance. This is a thesis validating print, not a thesis accelerating one. Overall, I'm giving this print a C+. So that's my grade on the report. Now let's talk about what you actually do with it. I've broken this into 6 scenarios depending on where you stand. Whether you're looking to get in, selling cash secured puts, holding shares, sitting on covered calls, holding leaps, or underwater, or thinking about adding, find the one that best fits your situation. Okay, let's get into it. If I'm flat this name right now, I'm not buying shares outright here. The operational story checks out, but there's no forward guidance to hang a premium entry on, so I'd rather get paid to wait. My plan is to sell cash secured puts on any post-earnings dip, and I'd keep those strikes meaningfully below where the stock is trading. That gives me room if rare earth headlines or cash burn worries pull it lower. Implied volatility stays juicy after a print like this, and that's exactly when I want to be the seller. I collect a real premium, and if I get assigned, it's at a price I actually liked. So for me, it's start with puts, not shares. The power purchase agreement income and the Department of War partnership give me a real fundamental floor underneath this stock. That's the kind of backdrop where I feel okay selling cash secured puts. But I'm keeping my strike floor well below where shares are trading. The capital spending is ramping fast and there's no guidance, so I don't want to be anywhere close to the money. I like the 30 to 45 day expirations for this kind of setup. That window gives me decent premium without locking me in for months while the story is still developing. Bottom line, I sell puts wide, not tight. If I own shares, I'm holding. The vertical integration story is actually showing up in the numbers, with NdPr sales up 127% year over year and real progress on Project Swarm and the Independence qualification. That said, I'm not aggressively adding here. There's no forward guidance to lean on, and the cash balance dropped by $378 million over 6 months. That's a lot of burn to just pile in on top of. The only reason I'd trim is if my position got too big for comfort. I'm not selling because the quarter disappointed, because honestly, the operational side didn't disappoint at all. So I hold and I don't chase ads here. If these were my covered calls, I'd want my strikes further out of the money than usual. Any Department of War announcement or a milestone on the 10x facility could send this thing gapping up in a hurry. Tight, short-dated covered calls are exactly what gets punished in a setup like this. One headline about commercial magnet production, and I'd be watching my shares called away well below where they belong. I'd lean into longer-dated expirations too. The operational momentum and the government partnership mean I want to give this room to run, not cap it aggressively for a few extra dollars of premium. For me, that means strikes further out, dates longer. If I'm holding leaps on this, I'm sitting tight. The quarter validated the vertical integration thesis, but it didn't pull the timeline to commercial magnet revenue any closer. The real catalyst I'm waiting for is commercial magnet production, actually hitting. The Independence qualification, the 10X facility, the gadolinium offtake, they all point that direction, but the inflection hasn't landed yet. So I'm not rolling my strikes up here. The ongoing losses and the heavy spending cadence mean the payoff is still back-end loaded, and I don't want to give up upside chasing a move that isn't ready. My move is hold leaps, don't roll up. If I'm underwater on this, the release actually backs up why I bought it. Separated NdPr volumes doubled. The power purchase agreement income showed up on schedule, and the balance sheet still has $1.45 billion in cash and short-term investments. So for me, that means averaging down on rare earth price weakness rather than cutting the position. The thesis is intact, and I'd rather lower my cost basis than lock in a loss on a story that's still working. If I'm adding new money, I'm only doing it into weakness, not strength. The cash burn is real, and there's no forward guidance, so I don't want to be the guy paying up on a green day. My rule here is scale in on weakness only. Bottom line, this print earns a C+ from me. The vertical integration story is measurably progressing, but the cash burn and the missing guidance mean I'm staying patient on this name rather than chasing. Thanks for watching, and I'll see you on the next one.